Olivia, Derek, recording started. Okay, so I'll monitor the lobby if I may, Peter. But without any further ado, I will pass over to you. As usual, if you want to get involved, then please raise a hand. But I will also open up the chat room. But Peter, over to you, and look forward to your presentation. Thanks in advance.
Good stuff. Thank you, Steve. So just a very brief introduction to myself. My name is Peter Abrahams. I work at LCP and have done for just over 11 years now. I've got a number of DB and DC pension scheme clients that I do the trustee advisory role to, and then I also have a little bit of involvement in our growing sovereign wealth business as well, so providing some advice to global institutions as well as the UK DB pension space. In addition to the client-facing stuff, I also have some investment research responsibilities. So I'm one of our lead researchers in our equity research team, and then also have some involvement in assessing responsible investment credentials of investment managers. So hopefully I'm the right person to present this tool today. What I wanted to talk about is the LCP Stewardship Dashboard, which is a tool that we developed to help, in particular, pension scheme trustees in the UK to assess the stewardship activity of their investment managers. So that's their voting and engagement activities, to use a slightly different term there. So the reason we developed this tool, we wanted to build something that worked for clients with a variety of different levels of interest and experience in stewardship. We wanted to build something that worked for lots of different clients. So we know that there's a big range of trustee approaches to considering stewardship and the level of importance that boards are placing on that. So for clients that want to meet their regulatory expectations, we know that the DWP and TPR are placing increasing scrutiny on trustee activity in these areas, and they're trying to encourage the pension scheme trustee business to think more carefully about the stewardship activity that their investment managers undertake. We wanted to build something to help trustees to meet those obligations. We also wanted to build something for those trustee boards that are really engaged on these issues and wanted to consider it in lots of detail and maybe have quite detailed stewardship priorities and areas of interest that they wanted to focus in on. So what it is, we have a series of voting activity data provided to us by Insightia, which is a third-party data provider. They give us voting data for pretty much all investment managers across all public company board meetings, pretty much anywhere in the world. So there's a huge amount of voting data that goes into our system. We used Microsoft Power BI to effectively build a dashboard that allows us to take that data, to slice and dice it and present it in a manner that's a bit more engaging and a bit easier to get into areas of particular interest or focus for trustees. So hopefully that's a useful intro. I will start sharing my screen so you can actually see what it is that I'm talking about. And I thought probably the best way to talk through this tool would be to use an example client. So I've previously presented this for a trustee client that's of medium size, I would say, so between 250 and 500 million sterling of assets. They have 2 equity portfolios, which is perhaps a little bit rare for a DB pension scheme nowadays, but they do still have 2 equity mandates specifically, not just mandates including equities, but specifically stocks and shares. One is the LGIM Low Carbon Transition Global Equity Fund, which I've shown on screen here on this front page. Now, that fund is a broad market equity fund. It invests in all companies in the Passive Benchmark Global Index, which is the MSCI All Countries World Index. What this fund does that is slightly different to just your standards global equity tracker fund is it varies the allocation to each of those companies based on the level of carbon emissions associated with those businesses. So companies that have got low associated emissions, like technology firms, for example, get a slightly higher weighting in this product. And companies that have very high emissions associated, like oil majors, for example, get a lower weighting in this product. The client also had an active equity product, so slightly different, much more concentrated, fewer stocks in the portfolio. And that's managed by Lazard, we're the asset manager here. So what this tool does, and on this front page, we're able to see a breakdown of the fund. So the pie chart in the middle here is just the sectoral breakdown of that product. So what percentage of the fund is invested in companies within each sector. If I click on each segment of this pie, so for example, if I choose healthcare, this table on the right-hand side, which shows the summary of the weightings to each individual stock, that then adjusts to show me companies within that given sector. So the first thing this tool is quite useful for is just to give a greater understanding of what the portfolio actually looks like, what's invested in it, what proportion is with each company. We can assign filters. So for trustees that are particularly interested in Climate Action 100, for example, as an initiative, I can filter that so that it just shows the companies that are covered by that initiative and their proportions in this fund. I can also do that for Nature Action 100, which is this one here, or this button here will show me companies that are effectively, it's the combination of the two initiatives.
Peter, we've got a
yes.
question from Podrick. Podrick, do you want to unmute, or do you want me to just read it out?
Sorry, yes, just briefly. I know this is for an index fund, so I'm assuming that the weighting you were talking about for each company on their carbon basis is just on a scope 1 basis, because if you're separating tech from other dirtier, it's a bit simplistic. So is it just on a scope 1 basis, that screening?
Good question. So it's on a scope 1 and 2 basis, which is
And
just
two.
the emissions that are associated with the activities of that business. So you're asking a very insightful question there, because clearly the technology firms are consumers of electricity that may be produced through the burning of fossil fuels. It doesn't account for scope 3 emissions in this product, the Elgin one, purely because it gets a bit more complex in terms of attributing all of the emissions from downstream and upstream to those businesses.
Yeah, and there's the water thing as well. It's not just carbon, is it? I mean, there's the use of water. If you increasingly, if you're using AI to compile a shopping list, you might be literally going through liters of water just to save yourself 5 minutes writing something down.
Yeah, that's right. So this product doesn't take into account water uses, as you correctly pointed out. It's a little bit more simplistic than that, but it does use data that we think is relatively robust on the emissions standpoint.
Thanks for that.
All right. So with the client that I presented this demo to, I thought what would be interesting for them is really to sort of look at companies that are in both portfolios. So something that is in the Elgin Low Carbon Transition Fund, which sort of covers every company in the global index, and then also a company that was held by Lazard, the active manager, as well. So one stock example was Nvidia, which is the one that I talked through with that client. So what I can do here is I can have a look at that company specifically, and I can look at voting activity in relation to that business across both the managers invested in by this scheme and then also an additional comparator. So I showed voting activity for Lazard and Legal & General, which were the two managers for the scheme. And I also included BlackRock as a bit of a comparator for LGIM as another large passive manager that invests in a similar manner. So just to give a very brief overview of this page, this chart on the left-hand side is showing the aggregated voting activity of these managers across all resolutions at NVIDIA across two meetings, one in June 2023 and one in June 2024. Just to make this a little bit simpler, I'm just going to focus on one of those meetings. So June 2023, you can see here. This word cloud I'll explain in a minute, but it relates to where one of the investment managers has given a rationale for the vote that it's undertaken. So on this table here again, the dark blue bars represent a vote by the investment manager in favour of a resolution. Now, most resolutions at board meetings are proposed by management, and in general, a vote for a resolution is usually in line with management's recommendation. That is not always the case, but it tends to be typical. The lighter blue bar here is a vote against a resolution. So those ones are slightly more interesting. It's where, in this case, Legal & General at this meeting has said, actually, we don't agree with something that management has put forward, and we've decided to oppose that proposal. And what we can do for those, which is quite interesting, if I click on that, I can have a look at those votes specifically. So what those votes were in respect of, and helpfully Elgin, whenever they vote against a resolution, they also give us the rationale for doing so. So if I open this table, and I will zoom in a little bit to make it a bit more legible as to what Elgin were actually voting on. So 3 of the resolutions that Elgin voted against were in respect of director elections, so re-electing directors to the board. And then one was on compensation for an executive officer at NVIDIA. And Elgin, helpfully in giving us this vote rationale, gives us a bit of information about what policy it is that Elgin has in terms of good practice or good governance that NVIDIA isn't meeting, and why they've then decided to oppose a specific resolution as a result. So for the compensation one, it's useful to see here that LGIM voted against on performance grounds. Now, essentially, this compensation package didn't meet LGIM's standards of performance required for it to be reasonable. So the performance conditions that the executive officer needed to meet in order to get the higher levels of compensation, the bar was set very low by LGIM standards, and so they voted against. Now, you can see actually on all 4 occasions the vote did carry, because shareholder support for the resolution was quite high, even with LGIM's votes against. And for the director elections, you can see one here was on diversity grounds. So LGIM has a policy that at least 1/3 of board members should be women. That wasn't the case at NVIDIA, and so they voted against the re-election of a director and expressed that view to NVIDIA as a result. One was on independence grounds. So LGIM voted against the re-election of the chair of a committee, because they believe that chairs should be only in situ for no more than 15 years, and that wasn't the case here. So what this was useful for specifically for this client was to give us an ability to ask Lazard, who was the active manager, whose voting record was quite different, what they were doing in terms of stewardship and what their views on those issues that LGIM had raised were. So there's 2 ways that managers can carry out stewardship, really. One is voting, which is LGIM's preferred approach. So if LGIM doesn't agree with the actions that a board are taking, they will tend to vote against specific resolutions in order to express that view. Other asset managers like Lazard take a different approach. BlackRock would also say that they take this approach, which is they're instead talking to companies behind the scenes. So they're holding regular meetings with board members, with executive offers, with other representatives of the company, and they're talking to them about areas where they think the company could do better, and they're encouraging improvements. Now, there's pros and cons to either approach. So LGIM's approach is public. It becomes a matter of record. It means companies like us have access to the data, and we can see what LGIM is doing on our behalf. BlackRock and Lazard's approach of talking to companies behind the scenes, in their view, it's a little bit less confrontational, because they're doing it in a collaborative manner. They're talking to companies outside of public scrutiny. But obviously it's less visible to observers like trustees and consultancies as well, to see what voting activity they're undertaking. So for this trustee board specifically, this gave us a number of questions that we were able to ask Lazard, their other manager, and say, you voted differently to our other manager on a number of these points at this meeting. What are your views on these policies, and how are you taking action on our behalf behind the scenes in order to encourage good practice? And what that's helpful for, I think, for trustees is that activity that goes on behind the scenes is a little bit more difficult for trustees to get sight of. It's difficult to know exactly what questions to ask of an investment manager to get them to reveal some more details about the activity that they're undertaking. And if the trustees are able to pick an example based on the voting record that they've seen, and then ask the managers that specific question, they can get some quite interesting discussions going. So it was revealed to us from this that Lazard has a policy that actually 40% of board members should be women at publicly listed companies, but that they were engaging behind the scenes to encourage NVIDIA over time to identify more female candidates and promote them, so that they would consider themselves for board roles like this. So if I show another bit of functionality from the tool, which is about proxy voting services and the recommendations that proxy advisory services make. ISS and Glass Lewis are the 2 major providers here. ISS are the market leader. They have about 70% market share, and Glass Lewis has most of the remaining 30%. And ISS have 2 functions, essentially. One is to actually execute votes on behalf of their investment manager clients who hold the shares at these company meetings. And the other role is actually to provide some recommendations to the investment managers on how ISS believes they should vote on a number of issues. So they're both an exerciser of the votes, and also they provide some advice on what votes they think are most appropriate. So the charts on this page effectively give us a bit more detail about how these investment managers voted when you compare those to the recommendations that the proxy voting advisor gave them. The table on the top left isn't very helpful. That's an aggregate summary of all of the voting activity of these 3 managers across all resolutions globally. But this one on the right-hand side breaks that down by showing that voting activity based on the likelihood of that manager to vote in line with ISS's standard recommendation for a vote. You can see here that Lazard had the highest proportion where they voted in line with ISS's standard recommendation, and Legal & General had the highest proportion of votes against the ISS standard recommendation. That's in line with what I was telling you before about how LGIM is using voting activity to encourage change. That's their primary tool of engagement, and Lazard is using more kind of behind the scenes discussions with management to try and affect change. The other nuance here I probably should have mentioned earlier, Lazard being an active manager, they can choose not to invest in a stock. LGIM is a passive manager, they have to hold all of the companies in the benchmark regardless of whether they agree with management's activities or not. So one action that Lazard can do that LGIM can't is they can just choose not to invest in the first place if they don't agree with the approach that management's taking. These two charts at the bottom here are about splitting out the darker blue bars here. So for those votes where the investment manager said, actually, we don't agree with ISS's standard recommendation, we want to do something different. This breaks that down based on whether they were breaking ranks with ISS in order to challenge the company. So these are the occasions where ISS says, we think you should support a management proposal, but the investment manager says, actually, we've considered our own policies, we've thought about it, we'd like to challenge the company and vote against that proposal. And then also the opposite case, so where ISS says, we think you should vote against the management proposal, and the investment manager says, actually, we do support this, having considered what our views are on this issue. We've broken this down by management proposals and then shareholder proposals. So shareholder resolutions are those that are not proposed by management, they're proposed by shareholders directly. And you can see there's a lot more difference between the managers on this one than there is on the left-hand side, which were the management resolutions, where there's not really a lot of difference between the manager voting activity there. On the right-hand side, so BlackRock, for example, has a policy where they just, as a rule, they don't support shareholder resolutions. BlackRock's view is that they are time-consuming and they're not particularly helpful. And a lot of the time, shareholder activist groups in BlackRock's view put forward the same proposals meeting after meeting. So something that BlackRock considers to have been decided at a previous meeting, there'll be another shareholder resolution with identical text proposed the next time around. And you can see that that's reflected in their voting activity here. So even when ISS says, we think you should support a shareholder resolution, BlackRock is saying, no, we're going to vote in line with management here. Very different story for Legal & General. So maybe the final thing to show you before opening this up to questions about the tool, this really is a section that was designed to help trustee clients with their implementation statements. Now, I've done a number of these over the years, having worked at LCP. They can be fairly dry documents, but the regulator does place some importance on them and does suggest that trustees try and carry these out in a manner that is consistent with the trustee board's specific views on certain issues. As previously noted, I've got clients with a very wide array of approaches to this. So there are those who just want to meet their regulatory obligations and to do that in a sensible, pragmatic manner without incurring large amounts of costs. And so by building this database that allows us to filter by a trustee's given stewardship priorities, we're able to pick some voting activity from here very easily. We're able to compile that into an implementation statement, but do it in a manner that's consistent with the trustee's stated beliefs. So if we want to just build an implementation statement that looks compelling and considers the right types of voting activity, we can do that in a pragmatic and cost-effective manner using this tool. But it's also quite useful for clients that are very engaged on this and they want to look at slightly more esoteric issues, for example. So one that I like to pick out here is on agricultural practices. So I've got a client personally who they're interested in antimicrobial resistance. So the possibility that by using antibiotics in food supply chains, it leads to more resistant strains of bacteria through natural selection pressures evolving, which could be a source of real pandemic risk for human beings. So if we filter on agricultural practices, we can look at the manager's voting record in respect of resolutions that were about the use of antibiotics in food supply chains. So lots of resolutions here for McDonald's Corporation, for Yum Brands, and for other sort of large food retailers about how they're sourcing the meat products that they use in their businesses, and then also how they are treating the issue of antibiotics in the supply chain. So for that specific scheme, they were particularly interested in voting activity on that issue, and they wanted to know what their investment managers were doing in terms of encouraging those companies to use to make sure that their food supply chains weren't spuriously using loads of antibiotics and perhaps creating resistant strains of bacteria in the future that could come back to haunt us. For trustees with slightly more sort of usual or more common stewardship priorities, we can look at voting activity there and give the trustees some confidence that the investment manager is taking those seriously. So if I pick director remuneration as an example and have a look at BlackRock's activity here, there's a huge number of votes because this is a pretty routine issue that's covered at many companies over the course of the year. And what you can see here for BlackRock's activity is they're not just always voting in favour of ratifying director remuneration. It's clear to us, having a look at this voting activity, that they are treating this on a case-by-case basis. Now, the advantage of using this tool to consider this issue rather than relying on the data provided by the investment manager, if you ask the investment manager, if you ask BlackRock, can you give us your most significant votes over the past year, it allows the investment manager to cherry pick the examples that put them in the best light, and so they can effectively mark their own homework to some extent. By developing this tool, this allows us to say, actually, we can look a little bit deeper and see what they're doing on your behalf and whether that's consistent with what they're telling us they're doing. So that's a brief overview of the tool. I think there's a number of use cases here. It's really designed to try and make this area of investment monitoring a little bit more easy to do. So to take less time in meetings, to be a bit more pragmatic, to be something that brings the issues to life and can be something that's interactive and perhaps a little bit less dry than going through voting policies that may be hundreds of pages long. And it's also a great tool in order to encourage trustees to then ask questions of their investment managers and to be able to ask targeted, informed questions that get the managers to reveal a bit more about their activity in this area. So very happy to take questions on anything there.
Peter, thank you very much. I've got a few questions myself, and then I'll probably come to Bobby and Podreg's got his, in fact, Podreg, you go first, and I'll come in later. Go on, you've got a hand raised, Podreg. So
You sure? If Bobby be in front of me, I'm quite happy to let Bobby go first.
no, you go. It's
All
fine.
right. Peter, what's the likely effect going to be with the shifting sands within the US? We've already seen BlackRock and many other asset managers and banks pull back from various DEI and ESG frameworks, and they're going to continue doing so that they fit better within the expectations of a Trump administration. Does that mean it's going to be harder? Well, I think it's likely to be harder for businesses that provide you with information to get the information they need. So that's just going to make it more important that institutional investors have access to something like this to flag up where there are deviations, or is it just going to make it less meaningful because they're working on even less information than they had before?
It's a really good question. It's something that we've been thinking quite a lot over the last few weeks because clearly there have been those high-profile withdrawals from initiatives like NZAM and BlackRock being the most recent one. I do think that this makes this tool more useful rather than less, because what we had before was a situation where investment managers who'd signed up to these initiatives had given us effectively a statement of their intent. So they'd given us evidence that they were taking these issues seriously and that they were going to try and manage these systemic risks on our behalf as investors over the long term. By having withdrawn from those initiatives, and as we know, there are political developments in the US that make it very difficult to remain a member of those initiatives. There's increasing levels of effectively lawsuit activity against investment managers, which mean they are trying to pull back from these initiatives. It means that having a system like this where we can actually look at what they're doing in terms of their voting activity becomes of greater importance. So for one example, a large investment manager who had withdrawn from the Net Zero Asset Managers Initiative, I had a research meeting with them not too long ago. And I sort of said, well, look, this previously your membership of this initiative was a good statement of your beliefs in this area. Are you still going to undertake engagement in support of climate risk reduction? They said, we absolutely are. That's not going to change. We've withdrawn from the initiative, but we're still going to be doing all of this work in order to encourage good practice. I put it to them that now it became more a question of trust, because I have to have that trust that they're actually carrying out the activity they're saying they're doing. And so this tool, this stewardship dashboard, allows us to have a look at that and to see whether they are actually continuing to do that once they've withdrawn from these initiatives. And in terms of the data that's provided to us, this is all public record, so it's all publicly disclosed, publicly available, which means it's very difficult for the investment managers to hide. Now, it may mean that if the voting activity doesn't look to be in line with what a trustee believes is the right thing to do on managing climate risk, for example, we might ask the investment manager, can you show us what you're doing behind the scenes if you're not using voting to affect change? And they might tell us we're not able to do that. And that then allows the trustee to make a decision as to whether that investment manager is the right steward of their capital, if they are the right party to be using. I do think longer term, we're probably going to see a bit more divergence between your investment managers that have got more of a US focus and those that are more European focused, and they've got more cover to say, actually, these are systemic risks and we do want to take them seriously.
Thank you.
Okay, thanks for that, Peter. That's good. Bobby, do you want to say a few words? Obviously, you're managing director of HS Trustees, and you've also set up an independent working party. This sort of stuff's really important to you, isn't it, Bobby? I think this analytics.
Yes. So, have you got any case studies of our clients who've used this, Peter?
Yeah, so it's a relatively new tool that we've developed. So our client case studies are relatively minimal at this stage, I'll be honest. So we're showing this now. We're demonstrating it at places like this to hopefully encourage greater take up. But we have shown this to a number of clients who've asked us to whether they can get access to this, so whether we could license this out to them, and we're exploring the ability to do that, so that those who want to look at this voting data in their own time, they don't just want to be reliant on us showing it to them in meetings, they would have the ability to do so. The clients that I've presented it to, one example that we had in terms of activity that the trustees then did differently, having discussed the voting policies that LGIM, who were also the investment manager in this case, were carrying out on their behalf, they said, well, actually, do those voting policies reflect our views? Do we think that what they're doing on our behalf is reasonable? Do we agree with the policies that they have in place? And so they asked us to conduct a review and to effectively read through those policies that LGIM has and summarise it for them, so they could go through and have a look and say, actually, this isn't conducive to what we believe, this isn't consistent, and we'd like to do something different. On what I haven't seen yet, but I expect probably will be a use case, is where trustees, get a manager in, they ask them some questions based on this voting activity that they've seen, and if the answers that they get from the investment manager they don't think are enough to give them comfort, they might use this tool to identify a manager who's got a voting activity that better reflects their needs and their priorities, and they ask that manager to come in and present and to make a decision on whether or not to use that manager instead. I haven't seen that happen yet, to be honest.
And are you happy to work with groups like ours, this trustee group, if we want to go in and get specific managers in to quiz on their stewardship actions? Because one of the things we think that we'll be able to leverage with this group is rather than a specific client just getting a manager and they think it's doing something slightly wrong, saying, right, you're going in front now of the trustee sustainability working group, which has got all the major independent professional trustees represented. So give them a bigger voice, more pressure on them.
Yeah, I think we'd be very happy to help with that. And as you say, that's a much stronger voice, and having the weight of those schemes and those trustee groups behind it just encourages the investment managers to take this seriously.
Okay, then final question from me is just and you do a lot of discussions with regulators. Have the regulators seen this? You've got any anecdotal feedback or any other feedback from the regulators on this tool?
I don't think we've shown this to regulators just yet. I suspect there is an intention to do that, and so once we do get some feedback, we'd be happy to share that and say what they thought. I mean, we certainly developed this with thinking about the regulation in this space and what the regulator wants. So I would certainly hope that it was something that they liked and was encouraging trustees to take action on something that they clearly view as very important.
Yeah, I think it's important. The more the regulator sees what can practically be done, the more
Yes.
chance we get of having practical regulation.
That's very true.
Cool. Okay, thanks for that. Peter, obviously, I think sort of talking to the regulators, as Bobby says, is important. whether they would actually rubber stamp it or not, it's entirely up to them. But you wanted to be front and center to help, for chairman statements and all that sort of stuff, and statement of investment principles and all the other bits and bobs. Do you see this as a completely standalone piece of kit, or are you saying that you only get this if you do LCP actuarial or LCP investment consulting or LCP administration? Or what I'm saying is could it be purely a standalone piece of kit, or does it come with sort of attachments, if you know what I mean?
Yeah, at the moment, we've only really been showcasing this with either independent trustee groups like this, with prospective clients who are talking to us generally, and then we've been using it at meetings with our trustee actuarial or investment clients. I think you've raised a good point, and that there is a possibility. Now, this decision would be made well above my pay grade, to be honest, but about using this as a standalone tool and saying, actually, you don't need to be an LCP advised client to make use of this product, because I think it's really interesting and useful. And to be honest, the more trustee boards that are using this to quiz their managers to encourage better practice, the better it is for all of us, really. So there's a bit of a public good angle there as well, which means I would like this to be in front of as many people as possible.
Yeah, I'm trying not to get too salesy here, but equally the other thing, of course, is it could be a Trojan horse with some new schemes to go, hey, well, look at this piece of kit. Oh, and by the way, what do you do about your investment consulting and your, actuarial and blah, 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 blah. But I'm not teaching you to suck eggs, Peter, but that would be an interesting angle to look at, because
absolutely,
there's very little out there like this, which is ticking lots of boxes. So quite impressive. And have you had any negative feedback from any of the other investment managers or the investment houses on this? I mean, obviously, a lot of this stuff you said was public record, but have you had any negatives coming back, or people being very defensive in this space, or what's your experience?
Not that experience yet. So we've demoed this tool with the investment manager in the room or I certainly have on a few occasions, and perhaps there's some grumbling behind the scenes that isn't shared with us. But as previously stated, it is publicly available. It's something that ultimately the trustees can always and have always been able to have access to. It's just been very difficult to get hold of the data. It leads to some interesting discussions and some interesting questions for the investment managers, and they can be a bit more targeted and a bit more direct than perhaps some questions on stewardship that they might have got from trustee boards in the past that might be a bit more high level. If I'm picking out a voting resolution and saying, why did you vote in favour of the use of antibiotics in your food supply chain for McDonald's? That is certainly a more targeted and pointed question that they may not have a prepared response to, and they might have to go away and do a bit of work to get hold of it. But I haven't had any complaints on it yet. And I do think when you get those stewardship team members from the investment managers in the room, and they're the ones that are seeing this in use, look, it's important to them. They do want their job to have some importance and for trustees to value it. So there is a little bit of a positive side for that part of the investment manager business there, is that we're putting increasing spotlight on something that investment managers are actually investing greater resource in. So it gives them a bit of confidence that it is actually useful use of their time and resource.
Yeah, okay. I've got another question, but Derek, let's come to you first. Derek, you got your hand raised. Do you want to unmute and ask a question or make a point or challenge or praise?
Well, can I offer some negative feedback? I mean, the example you've given, Peter, is a passive investor, and I suspect you're in passive investment. One of the reasons being you think it's low cost. So I've got a question about using it in passive investment. How much does this actually cost to have such microscopic detail of votes, where typically management carry them by 80-90% majorities? And then switching to a more, I guess you would call it an active style, I might call it something different, but in an active style, is this really where you should be spending limited time discussing with managers how they voted or didn't vote? I would much rather see consultants. I mean, this is great for consultancy business, I can see that. I'd much rather consultants analyze the performance of the individual investments that people make. Now, that's hard to do in a passive portfolio, too many positions. You're tracking an index anyway, so that's a different discussion. But if it's an active portfolio, I don't want to be discussing whether we voted for something that was voted down 90 to 10 or something. I want to be discussing why we bought such and such at such and such a price, how much we've made from it or lost on it, and whether we should still be holding it, whether we should be adding to it. These are the discussions I want to have, but investment consultants generally drift into this area of what can be measured and gets managed rather than looking at the more important things.
So thank you for the challenge. It's very much appreciated. On the first point there about how a passive manager would carry out voting activity, covering so many different companies and whether that's a good use of time and resource, what we do see in Legal & General's case, for example, is that they have customized voting policies that they have in place with a proxy voting advisor like ISS. So they will say, here's our policy, and we would like you to effectively carry out our votes in line with this policy. And that's one way of kind of managing the workload that's involved and ensuring the costs don't get too high. On the second part of your question there, as somebody who carries out active equity research at LCP, I also really want to be having those conversations with trustee clients and with managers and getting into the detail on performances. So much the bread and butter of what I'm doing on the research side. So it's a very good challenge. I think this tool can be supplementary in some cases to performance analysis. I'd certainly hope that the consultancies that you're working with are carrying out analysis of that performance and giving you sufficient detail in any case. But one potential use case here of this tool that would supplement the kind of discussions that you're talking about. So, for example, back in, I think it may have been 2019 or 2020, Vale, which was a Brazilian metals and mining firm, had a tailings dam disaster where a dam burst and it flooded a number of villages in Brazil and caused quite a lot of not only human damage, but also, of course, damage in terms of cost that firm was then liable for. That stock then sold off by quite a significant margin as a result of the additional liability that they had. What this tool allows us to do in those circumstances, if we have an investment manager who is invested in that stock, now we're able to go and have a look at their voting activity in relation to that business. So sometimes we do get cases where the investment manager might say, we had no idea that this was a potential issue. We had no idea that their safety regulations were lax, that there were corruption issues involving that business that meant that they were effectively bribing safety inspectors to get past safety tests. We're able to then have a look at the voting activity and say, well, actually, there was this shareholder resolution on that specific issue and you voted against it. Talk us through the thinking there. Was this genuinely brought to your attention or not? Or we'll have some investment managers who might say, we identified this ESG issue and we were encouraging the company to manage it, but they hadn't actually taken enough action that they were able to prevent this ESG risk event from taking place. And again, we can have a look at the activity and see whether or not that's true, or at least ask some more targeted questions.
Okay, Derek, with that, hopefully.
Yeah, I've just looked up the Vale share performance over 5 years. I would have dropped it 5 years ago, but anyway, there we go. But you can spend a lot of time discussing microscopic detail, but you should really be looking at the fundamentals. Is this something you want to invest in or avoid? Something to hold, something to add to, something to replace with something better? And I think if trustees spend their time looking at voting records, they're taking their eye off the ball. The ball I would prefer they followed, but it's a personal view. I respect Peter's comments back to me, but you asked for negative feedback. I gave you some.
There you
Happy
go.
to receive it. Thank you.
There you go. Well, Bobby, you're also a trustee. Do you think that focusing on too much on voting takes your eye off the ball, or do you think it's a bigger picture than that?
So I'm not looking at the detail of the voting like this. I'm looking at the big trends and the big moves. So concentrating on the big things that will make a difference and that will also make a difference to share price performance. So this isn't about having like 30 stocks in a portfolio and looking at the details of their voting and how good or not they are at voting. This is about things like if within a carbon transition and a big company is saying they're doing this transition and then they're doing things against it, or the investment managers are saying we're back in this industry needs to transition fairly, and then they're voting against resolutions to actually get the industry to transition fairly. These are all big financial issues. I'm not looking at the individual voting records of whether they like the director or not. It's the higher level stuff of making sure that the industries are doing the same things. And the other thing I'd point out is, for trustees, we can't solve the world. We can't solve the climate crisis. It's not our job to do that. But we've got a big voice where we can get involved in the 2 or 3 big issues a year that will make a difference. And that's where I'm at. I want it to be able to make a difference. And for small schemes to get behind it, as I did last year with the one initiative I did, we had a very small scheme, a team of lawyers, but a very small pension scheme. They managed to change LGIM's mind on a big resolution that actually mattered. So it's those sort of things we're looking at. And this gives us the detail to be able to do that properly, rather than going into the detail of what all the voting trends are. So hopefully that gives Derek a bit more comfort about what we're doing. We're not doing I'm with you, Derek. Even the big stuff we're doing here is about driving performance and driving the financial outcome. Because the financial outcome, the transition, the climate change, all those things, they all fit together. If you obviously you can just see with latest events happening in the world.
Okay, cheers, Bobby. Peter, you're presumably agreeing with all that, I guess, that, Bobby's approach is refreshing, I guess, and trying to focus on the bigger picture.
Much so, and as he said, it's trustees have got a limited amount of time and they can't solve everything by themselves. And so, as Bobby says, focusing on some really important areas where you can have an impact is a really, really sensible approach.
Yeah. As usual with Playpen, I'm going to ask another question, because sometimes, this is obviously a great tool, great for trustee boards. Where does a member come in all this? Is there any opportunity for members? I'm thinking very large schemes as well. Is there any functionality that trustees could use to filter down surveys or input from members who may feel quite passionately about all this sort of stuff? Is there a member subdivision or a member area that trustees could use, or not? Is that something that has been developed or could be developed?
Interesting question. And my colleagues in the DC team here at LCP have been using this tool with trustee boards, and I'm sure that's a question that they've been receiving, is how we can potentially get access for our members to this level of data. I do think, to be honest, one of the real issues here is about getting people to be engaged with their pensions generally. So not just on stewardship and on good capital management of their pension assets, but also just generally engaged with their pensions and thinking about those and taking active decisions. Things like the implementation statement, I think, were aimed at that. So the idea was to try and get pension scheme members to really get engaged with the activity of their investment managers in their pension plan. It didn't really work. I often think maybe we should, on page 3 or 4 of a document, write, if you're a member and you're reading this, please email Peter Abrahams and I'll send you £10 as a reward, just to see how many emails we get. So hopefully something like this, which can make this a bit more interactive, that can make it a bit more engaging, could hopefully be part of that story to try and get members to think about this a bit more.
Well, you never know. You might need deep pockets, might you? So if you get 1,000 responses at 10 quid each, you're very generous. You're very generous, Peter. You're very generous. But it's an important point, and I think it's Henry and I have been involved with the master trust world. Master trusts would be would probably be quite keen on this. I think to at least can convey communication with members. When you've got large master trusts, the only communication that a member gets is either an annual benefit statement or a wake-up letter, and accounts they won't look at, chairman's statement they won't look at. We all know this in the industry. It doesn't, things like this are a step towards opening up new communication or fresh ideas for the trustee board not to be locked away and do their 2 or 4 meetings a year, but to actually start integrating with the members a bit more. So I like it. I think it's got legs. But actually, I think whether it's an app or whether it's some sort of a CRM system, that it's got to go further. I think to try and engage with the members with DC and obviously CDC is the new thing coming out. Do you see this working also in CDC space? I presume you're going to say yes.
No, definitely. I mean, yeah, I think it's clearly that there's use cases for this both in DD and DC, and so for CDC space, we would definitely see this appropriate as well. Especially because I think in the CDC space, you're probably going to see more ability to take risk than you have in the DB space. So equity holdings will probably form a larger part of CDC allocations, and so there is that ability to have a look at tools like this that look at manager voting activity.
Yeah, yeah. And are you also attacking IGCs as well? I mean, we had an interesting playpen before Christmas where one of the proposals of the government was to maybe try and switch a lot of the GPP contract-based GPPs to master trusts. Do you think this also works in the IGC space as well for a lot of the big GPP providers? Is that something that you've tested or tried or attacked?
I'm not sure off the top of my head. I know my DC colleagues have been chatting with a number of different types of kind of DC or self-invested pensions in that space, but I would certainly hope this would be appropriate for investors of all types, really, and certainly those that have equity allocations.
Yeah, yeah. Okay, cool. I'm trying not to put you on the spot, Peter. The other thing that came to mind was cost. You're probably going to say, well, if you do admin or investment consultancy or actuarial with us, it comes free. But presumably, if you want to develop a standalone version under license, we've got Bobby on the phone, and obviously Derek and Henry and a lot of experienced people. And Podreg's, I think, got some trusty experience as well. It's got to be reasonable, hasn't it? There's no point saying, hey, we've got this fantastic piece of kit, but it's 10 grand, 20 grand a month or something like that. I mean, maybe if it's Shell or BP, then it's petty cash. But for normal schemes, there's got to be a price point for this to work, isn't there? What's your view on pricing?
I totally agree with what you're saying there. So to be totally frank and upfront, it's got to be set at a level where people actually want to engage with it and use the tool. And as you say, if we set a charging basis that was just not commensurate to the level of benefit that trustees are able to get from this, no one's going to take it up. The advantage that we have is that our costs in developing this and in effectively buying the data are fixed in nature, which does mean that if we're able to get lots of take up for this, we can spread those fixed costs over quite a large number of schemes, and we can price this pretty competitively. But as previously said, those decisions will certainly be made above my head. But my view there will be similar to yours, which is we've got to price this keenly. As you previously said as well, it's a source of potential business development for us. It's a tool that is a good showcase for the work that we're doing, and hopefully encourages trustees that are thinking about a change of provider that maybe they'd like to ask us to come and pitch more generally. So I certainly wouldn't want to see us pricing this in a way that made it uneconomical or discouraged take up.
Yeah, yeah. And obviously, as LCP, you've also got David Fairs involved, and you've got Sir Steve Webb involved. Have they been helpful in building this or being part of this, or because obviously, David's background with the regulator and Steve's background with government, perhaps there's some lobbying going on as well to say, hey, this should be more front and center of TPR strategy maybe, and government strategy. So have you heard any mutterings, or am I just fishing?
They weren't involved in sort of the initial development of the tool. We built that with a more specific trustee use case in mind, and then as we've kind of built it up, we've then started to expand how we're marketing it and who we're talking to. And as you say, at that point, people like David and Sir Steve do come into that conversation to help both the work that they're doing, because it is consistent with a lot of the conversations that they're having and a lot of the work that they're doing with regulators and encouraging good practices in general. And then also, as you say, suggesting other potential use cases for it.
Yeah, cool. Okay. Podrick, you still got your hand up. I don't know if there's a technical issue, or have you got another question? Or would you like to ask another question, Podrick? Or Henry, I know you've got your Ferrari jacket on now, Henry. So you're racing ahead on this. But Podrick, do you want to ask any more questions, or was that an
No,
old hand?
sorry, I neglected to remove my marker.
There we go. There we go. So good stuff. Are there any other questions from anybody else? Peter, Derek, Bobby? Cool. Okay. Peter, is there a copy of the slideshow that we could use or send out to anybody interested? Are you happy for us to release that to any members interested, or do you want to do a redacted version, or what's your thoughts on that?
In terms of the demo that you've recorded, I think we'd be pretty happy for that to be shared if you want to do so. And we've also got a flyer advertising the tool, so we can send that over. And
Yeah, if you've
we're
got a
working
PDF
on
of
some
that.
other promotional materials too that, again, very
Yeah.
happy to share with this group.
Yeah, that'd be great. Yeah, and if you and Olivia can send the PDF through, that'd be fantastic. So,
Absolutely.
brilliant. Okay, excellent. Well, if there are no other questions, let's just double check the chat room, because I forgot to check the chat room. We've done the scoping. And Peter's joined and left, and then joined again. No, that's fine. Cool. Excellent. Okay, Peter, thank you very much indeed for your time. Thanks for your presentation. Good luck with the product. It sounds like you've got a lot, a lot on your plate, so to speak. Lots of development work as well, which is probably quite exciting. And whether schemes are large or small, this is really important stuff, and the technology is there now to deliver. I wish you every success with it. Yeah, if you can send us a PDF through, and I'll send you a copy of this video. That'll be brilliant. So excellent stuff. So thanks for that. I'm sure we'll get a few claps and a few virtual claps from Henry and Derek and Peter, and well done you, Peter. Thank you very much. So as usual in these situations, we pray for peace in the East and peace in the Middle East, which might happen this week. You never know. If you've seen the news this morning, there could be peace in the Middle East, so that'd be good. And next week we have Hymans Robertson presenting. They haven't told me the subject yet, but Hymans Robertson are presenting, so I'll come back to you on that as and when. But the video of today will be on the website later today, and we'll also do a podcast for those of you that like going in the gym and running and listening to podcasts. So there we go. But Peter, thank you very much indeed for your time. Really appreciated it. Thanks to Olivia as well for joining and for arranging. And have a good rest of the day and have a good rest of the week. And hope to see you all soon on Playpen. Thanks very much indeed. Cheers, Peter.
Cheers.
Thanks a
Take
lot.
care.
Cheers.
Bye.
Bye. Bye.